Good morning. Our lecture today is about financial economics and what's meant by financial economics. Just to try to think about what we are going to study during this course. From your point of view, what are your expectations about this course? So let's start with the definition of finance. What's meant by finance? Finance can be defined as art and science of managing money. So finance is concerned with the process, institutions, markets, and the instruments involved in the transfer of money among individual businesses and governments. So it's related to two different sides: individual, government, and businessmen. And finance is related to the intermediary who do this process, who do the process of transferring money. These instruments or intermediary can be process or institution or markets or instruments. So this means that finance is related to the process, institutions, markets, and the instruments which are concerned with transferring money from or between individual, government, and businessmen. What is the relationship between economics and managerial finance function? The field of finance is actually an outgrowth of economics. Finance is sometimes referred to as financial economics. Financial managers must understand the economic framework within which they operate in order to react or anticipate to changes in conditions. So, financial managers have to understand economics in order to make decisions. The primary economic principle used by financial manager is known as cost benefit analysis. So any financial decision should be implemented by comparing benefits and costs. If benefit exceeds cost, so you can proceed to this decision or to take this decision. If not, so this is not going to be a profitable decision to take it. What are the main objectives of our course? At the end of this course, you will be able to understand financial activities and techniques, that are used in performing financial analysis. You will be able to recognize and analyze different contexts of financial policies. So you will be able to understand financial policies, financial decisions, and why we do this or take this decision. What are the tools that have been used in order to achieve this decision? To achieve the main objective. Number 3, you will be able to understand the causes behind financial crisis. What are the main topics that will be included in this chapter? So this is course outline. In addition to the introductory lecture, you will have to understand financial statements and analyze them. You also have to understand number of basic financial concepts, such as time value of money, risk and return, bond and stock, or known as debt and equity market. Also, you have to understand the long-term investment decision, so we have to know cash flow principles and the capital budgeting techniques. And then we have to move to long-term financial decisions, and this is related to cost of capital, leverage and capital structure, dividend policy, and so on. Also, we have to talk about the short-term investment decision or financial decision. And in case of short-term decisions, we have to understand the financial planning, working capital and short-term financing, cash and marketable securities, account receivables and inventory. So these are the main topics that will be included in our course. Let's start with our first lecture or first topic, which is the investment environment. In this lecture, we are going to talk about what's meant by investment, what's the difference between real and financial assets, what's the financial market and what's its role in the economy, what's meant by investment process, and finally, the difference between the types of markets. First, What's investment? Investment is the current commitment of money or other resources in the expectation of reaping future benefits. So this means that you are going to reduce current consumption in order to increase consumption in the future, or planned later consumption. So this means that today you are going to postpone your current consumption or reduce your current consumption in order to save more and invest more, as you think that this investment will yield a huge benefit or profits in the future that can be used in consumption. An example for investment is stocks. You are going to buy stocks or shares in a company. You are going to use this money or postpone or reduce your consumption today just to increase profits and use it in future consumption. Another example is investment in yourself. Or investment in human capital. This means that you are going to take courses, for example. So you are going to reduce consumption of goods and services in order to increase investment in yourself, in order to increase your training or your courses, as you expect that this training or courses will make you more qualified, and as a result you are going to get a future benefit or a higher salary in the future, which in turn increases consumption in the future. So these are different examples for investment. Assets can be classified into real assets and financial assets. What's the difference between real and financial assets? With respect to real assets, it's assets used to produce goods and services. While financial assets are claims on real assets. So real assets, or in other words, are tangible assets, which means that you can see and touch, just like land, building, equipment, machine, etc. So they are going to be used in order to produce goods and services. This is real assets. While financial assets are claim on real assets or ownership, just like stocks and bonds. Stocks and bonds do not contribute directly to the productive capacity, but they are claims on real assets and income generated. So if this is a balance sheet of US households, you can find that real assets includes real estate, consumer durables, and others, or and then total real assets. So this is the real assets. Also, you can find that financial assets consists of deposits, pension reserves, corporate equity, equity in non-corporate business organization, mutual fund shares, debt securities, and others. So this is the financial assets. So these are the two different types of assets as we have mentioned before. Any balance sheet has assets and liabilities and owner's equity or capital. They should be equal to each other. So this is the asset side of the balance sheet, and this is the liability side of the balance sheet. They are equal to each other at the end. Do you think which one of them is more important? Real assets or financial assets, and why? Actually, both of them are important or necessary in modern economy. When investors buy newly issued financial securities, the firm uses the money in order to buy real assets. So this means that financial assets are going to be used in order to finance the real assets and increase the wealth of the company and hence the profit of the owners. So this means increase financial assets in order to use the money to buy real assets. These real assets will be used in order to increase production of goods and services. So profits and wealth will increase as well. So this is why both of them are important to the company. So in a company's balance sheet that issue financial assets, we can find that assets minus liabilities equals net worth or equity. So a bond that you own is your own asset, but is a liability or debt of the company. So bonds is assets for the owner, but liability for the issuer. So for the owner has a claim on the income interest. So the owner would like to receive interest in return for buying this bond. In addition, the owner must be paid the principal. Therefore, your asset is the company's liability. So the success or failure of the financial assets we choose to purchase depends on the performance of the underlying real assets. You are going to buy bond or stock. These bond and stock will be used in order to increase production. So they are going to be used, the money collected from these bonds and stocks will be used in order to buy real assets. These assets will be used to produce goods and services. As long as the performance of these real assets is good, so this leads to a success of the financial assets. Otherwise, this means that there is a failure in the financial assets. What are the different types of financial assets? Mainly, there are three types: fixed income or debt, common property, common stock or equity, derivative securities. Let's compare between the first two types, and then we are going to move to the third one later on. What is the difference between debt and equity? With respect to the instruments, in case of debt market, the bond is the main instrument, while in case of equity market, stocks are the main instruments. Number two, with respect to maturity, bond has a maturity date. As it can be short term, which is less than 1 year, long term, more than 10 years, or intermediate, from 1 to 10. So bonds has bond has a maturity date that can be less than 1 year, and in this case it's known as a short-term debt. If it is more than 10 years, this is a long-term debt, and if it's from 1 to 10, this is an intermediate term debt. What about stocks? or equity. There is no maturity date in case of stocks. Why? Actually, bond mean that the company is going to borrow money from you for a time period, and this is the maturity date. And you are going to get interest in return. And as a result, you have no voting power, while with respect to equity, you are a shareholder. Or in other words, one of the owners. So if you are going to make profits, you are going to get a share of this profit. If the company is going to lose money, you are going to lose your own money. So as you are one of the owners, so there is no maturity date for your ownership. Return. With respect to return, in case of bonds, you are going to get, as we said before, interest. This interest can be monthly, quarterly, semi-annually, or annually. While with respect to the stockholders or the equity holder, he is going to get dividends or a share of profits of the company. What about the risk? You think which one of them is more risky? To be a bondholder or to be a stockholder? It is commonly known high return, high risk, low return, low risk. So with respect to equity, you are going to share a high return with the owners. So in this case, you have high risk. If you are going to lose, if the company is going to lose money, you are going to lose your own money. While in case of bond, you are going to be paid before any other thing. Okay? So there is no or little risk. Voting power. As we said before, that in case of bondholders, they have no voting power. While if you are an equity or a stockholder, you can vote for example, for the selection of the CEO or the board or any other decision we would like to make vote about this decision. So you have the right to vote. So these are the main differences between equity and debt, or in other words, bond and the stock. So with respect to debt, you are going to get a fixed stream of income. The longer the time period of the bonds, the higher the risk, and vice versa. So we can consider stocks as a long-term securities. So long time period means high risk and vice versa. Short time period, low risk. So, for example, if each student loans me $100,000, for example, and I'm going to pay 4%, so if I am going to invest this money in an investment that could make profit of 9%, so this means that all of us can make profit, as you are going to pay the students 4% and get 5% as your own profit from these investments. So once again, you are going to get a loan with an interest of 4%, and then you are going to invest this money in an investment project that yield 9% interest rate or 9% rate of return. So the difference between your return and your payment, which is 9 minus 4, is 5%. This is the net return that you can get. So in this case, you are going to get 100% through issuing bonds, and you are going to pay 4% interest on these bonds. So the bondholder will get 4% as a profit. And then you are going to make investment for and get return of 9%. So this is your own net return after the payment of cost of capital. What about number 3, which is derivative securities? Derivative securities such as options, and the future contracts. Options and the future contracts provide payoffs that are determined by the prices of other assets such as bond and stock. It's like a promise between two players or two parties that you are going to exchange goods or money after a month, 2 months, 3 months, at a specific price, which has predetermined before. So these are the main three different types of financial assets. Now let's move to the investment process. What's meant by investment process? An investor's portfolio is simply his collection of investment assets. So investor portfolio is collection of investment assets. These assets can be real and financial. Once the portfolio is established, it can be updated or rebalanced by selling existing securities or buying more securities. By the way, the word securities means bond and stock. So this investment portfolio can be modified or updated by selling of existing securities, buying new securities, investing additional fund to increase the overall size of the portfolio, selling securities to decrease the size of the portfolio. So investment assets can be categorized into broad asset classes, such as stocks, bonds, real estate, commodities, and so on. So investors make two types of decision in constructing their portfolios. Assets allocation decision, so they would like to allocate or make decision regarding a choice between different asset classes. Are they going to invest or to use their money in bond or stock or real estate, etc. And number two, security selection. In this case, we have to take the decision on which securities, on which bond and stock they are going to hold. So once again, we have different types of assets. Stocks, bonds, real estate, commodities, etc. So the first decision is to distribute your money between these different types of assets. And this is known as asset allocation decision. Number two, if you decide to have bond and stock, which is securities, so you have to decide which securities are you going to hold, which stocks or which bonds, or what is the percentage that will be choosing for stocks and what will be the for bond. So related to decision number 2, which is security selection, we have to make a security analysis. With regard to security analysis, you have to determine the value to the investment assets. Or in other words, if you are going to invest in bonds, what is the expected fixed rate that you are going to get, which is the rate of interest as we said before. And with the same with respect to stocks, you have to determine what is the expected return in this case, in order to identify what is the appropriate mix that you have to choose. For example, you can buy stock with an average return 12% per year. But this asset is more risky, as we said before, that stocks are considered to be long-term securities or long-term assets, and as the time period is going to increase, so the asset will be more risky. So here asset will be more risky. At the same time, you can buy bonds, and in return you are going to get 4% interest rates, annual 4% interest rate. This is a lower return, but at the same time it's less risky compared to stocks. So do you think you are going to choose which one of them? The stocks with the high return and more risk, or the bond with the low return and low risk? Actually, you are going to make a combination of both of them. So in order to take this decision, we have two different strategies. Either to choose top-down portfolio management, or bottom-up portfolio management. What is the difference between these two different strategies? So with respect to top-down portfolio, we are going to start with asset allocation based on risk tolerance. So this means that an individual investor will compare between the percentage of risk that will be in bonds versus stocks. What about bottom-up portfolio? Here, choosing investments or securities will be based on prices, or in other words, it will be based on profit regardless of risk. So according to the first strategy, we are going to compare risk and choose based on risk. While with respect to the second strategy, it's based on return. They are going to compare between return on investment on a stock and bonds, regardless of the associated risk with this investment. Financial markets are considered to be competitive market. What's meant by competitive market? A competitive market, in general, not related to the financial market, means that there are large number of sellers and buyers in this market. No one of them can affect the price, so all of them are price takers. Free availability of information, no barriers to exit or enter the market. What about the financial markets? Financial markets are highly competitive, which means that there are many experts searching for stocks and bonds. So actually, these experts would like to compare risk and return. And here we have risk, return, trade-off. Which means higher risk assets priced to offer higher expected return. High risk associated with high return. So if everything is held constant, investors would prefer investment with the higher expected return. So as a result, we have to make a diversification in order to avoid the high risk. So diversification means many different types of assets are held together in a portfolio, so that if there is a loss in one type of assets, this loss can be covered by a profit in another type of assets. So this means that you are going to buy like a basket of different types of assets. Some of them high risk and high return, while others are low risk and low return. Okay, we are going now to make a quick recap in Arabic. احنا النهارده اتكلمنا على يعني ايه investment وايه هي ال different types of assets. طيب الانفستمنت هو ايه؟ اللي قلنا الانفستمنت ده هو ان انا كاني باخد قرار ان انا هاجل ان انا اشتري حاجه دلوقتي علشان احوش، والفلوس دي احطها في انفستمنت. ليه؟ علشان انا في المستقبل هبقى اعمل الكونسامشن بتاعي. وادينا مثال على الكلام ده ان انا هعمل استثمار في نفسي. انا بقول دلوقتي انا والله يا جماعه بدل ما انا هشتري مثلا اكل عجباني، ولا هشتري لبس جديد عاجبني ولا كده، لا انا هاخد الفلوس دي اروح بيها كورس، والكورس ده هزود بيه السكيلز بتاعتي، فلما اجي اشتغل بعد كده يبقى انا هاخد مرتب اعلى عشان انا الكواليفيكيشنز بتاعتي بقت اعلى. يبقى انا كده كاني اجلت الكونسامشن بتاعي من دلوقتي للمستقبل. طيب قلنا بعد كده ان احنا عندنا الاسيتس ممكن نقسمها لنوعين، ريال اسيتس وفاينانشال اسيتس. الريال اسيتس دي هي الاسيتس اللي انا بستخدمها عشان اعمل برودكشن بمعنى اصح. طب زي ايه؟ زي اللاند، زي البيلدينج، زي الايكويبمنت. طيب وات اباوت الفاينانشال اسيتس؟ الفاينانشال اسيتس هي الفلوس انا دفعتها علشان يجي لي ربح، بس انا مش هي في حد ذاتها مش هتعمل لي الاستثمار. زي ايه؟ زي البوند والستوكس. وقلنا ان عندنا اي بالانس شيت فيها اسيتس ولايبيليتيز. الاسيتس دي هقسمها لقسمين، الريال والفاينانشال. المفروض ان مجموع الاثنين مع بعض هو ده التوتال اسيت بتاعي. طيب بعد كده قلنا ان احنا عندنا في 3 انواع مختلفين من الفاينانشال اسيتس: fixed income or debt, common stock or equity, derivative securities. بدأنا في الأول خالص عملنا مقارنة ما بين الديت والإيكويتي. إيه هو الفرق اللي ما بينهم؟ الديت ده كأني مسلفة حد فلوس، فبالتالي أنا مش شريكة معاهم وماليش في البروفيت بتاع الشركة دي. فأنا اللي أنا هاخده هو فلوسي في آخر السنة، في آخر المدة اللي أنا مسلفاكوا فلوس مثلا 1000 جنيه، فأنا في آخر السنة هاخد ال1000 جنيه بتاعتي. طيب بلس إن أنا باخد فوايد على الفلوس بتاعتي دي. انما الايكويتي لا، الايكويتي انا شريكه في الشركه دي، فانا مش هقدر اقول ان في تاريخ صلاحيه لشراكتي دي. انا موجوده طول ما انا عاوزه افضل موجوده في الشركه، وقت ما احب امشي همشي بمزاجي. وقلنا ان احنا عندنا في نقط كده عملنا بيها كومباريزن ما بين الديت والايكويتي. اول حاجه ايه هي المين انسترومنت؟ قلنا في الديت هي البوند، وفي الايكويتي هي الستوكس. طيب قلنا ماتيوريتي، الديت اللي هي البوند لها ماتيوريتي ديت، لها تاريخ صلاحيه بمعنى اصح. انا بقول ان انا هبيع لكم بوند مدتها سنه، هبيع لكم بوند مدتها 10 سنين، هبيع لكم الشهادات بتاعت قناة السويس مدتها كذا. يبقى طالما قلت مدتها كذا يبقى لها ماتيوريتي ديت. طيب هنقسمها ل3 حاجات: لو اقل من سنة بقول عليه شورت تيرم، لو من سنة ل10 بقول عليه انترميديت، لو اكتر من 10 سنين بقول عليها لونج تيرم. انما الايكويتي ملهاش ماتيوريتي ديت، هي مفتوحه، انا شريكه معاكم في الشركه، وقت ما احب يجيلي مزاجي ان امشي همشي. عشان كده نقدر نقول على الايكويتي ان هي لونج تيرم انفستمنت، هي حاجه كده طويله الاجل. طيب في المقابل بقى البوند هولدر ده بيطلع بايه في النهايه؟ انا اديت لكم، انا استلفت منكم فلوس، هدفع لكم عليها فوائد، يبقى انا عندي انترست هيدفع. طب بالنسبه للستوك هولدر، ده واحد شريك في الشركه، لو الشركه كسبت هياخد نسبته من الارباح بتاعه الشركه، فبقول هياخد ديفيدند. طيب انا دلوقتي مستلفه منكم فلوس، هل في كده اي ريسك بالنسبه لكم؟ لا، انا حتى لو فلست اول حاجه هيعملوها ان هم يدوكم انتوا فلوسكم. انما بقى بالنسبه للستوك هولدر، ده واحد شريك، لو الشركه خسرت هو بيخسر فلوسه معاه، فيبقى كده انا عندي هاي ريسك. طيب عايزين ناخد اي قرار، فعايزين نعمل فوت، عايزين نعمل تصويت على الحاجه دي. فانا بقول بقى بالنسبه للبوند هولدر هو مش من حقه يصوت، ده واحد مسلفني فلوسه ملوش دعوه بقى انا بدير الشركه ازاي، دي حاجه بتاعتي. انما بالنسبه للستوك هولدر لا، هو من حقه انه يفوت معايا. طيب بعد كده اتكلمنا على الديريفاتيف سيكيورتيز، قلنا دي زي الاوبشن والفيوتشر كونتراكت. ده ببساطه كده انا مثلا عايز اشتري، انا جاي لي بضاعه بعد شهر، بس انا مش عارف سعر الدولار هيفضل زي ما هو بعد شهر ولا لا، فانا بشتري دلوقتي كونتراكت بان انا بعد شهر هاخد مثلا من حد 100,000 دولار، وهنتفق دلوقتي على سعر الدولار. السعر بقى اتغير في المستقبل ما اتغيرش، احنا خلاص هننفذ على اللي احنا كاتبينه في العقد بتاعنا ده. بعد كده اتكلمنا على بوينت تانية اللي هي الانفستمنت بروسيس. بنقول ان الانفستور عاوز يعمل بورتفوليو، عاوز يشتري كولكشن من الانفستمنت. هو مفيش حد بيجي يحط فلوسه في حاجه واحده، يشتري بيها شويه انفستمنتس مع بعض. طيب البورتفوليو بتاعتي دي او الباسكت بتاعتي دي انا هغير فيها ازاي؟ يا اما هبيع سيكيورتيز يا اما هشتري سيكيورتيز جديده. يعني لو عايزه اكبرها هشتري سيكيورتيز، عايزه اصغرها هبيع السيكيورتيز اللي عندي. طيب بناء على الكلام ده يبقى هو كده من حقه ياخد قرارين. القرار الاولاني الالوكيشن، الاسيت الوكيشن ديسيجن، ازاي هيقسم فلوسه على الاسيتس المختلفه. اتفقنا ان الاسيتس بتاعتي فيها فاينانشال وفيها ريال، فهيقسم ازاي على الفاينانشال والريال. هيخلي كل فلوسه فاينانشال، هيخلي كل فلوسه في نوع معين من الفاينانشال زي الستوك مثلا، ولا هيخلي كل فلوسه في الريال؟ هيعمل ايه بالظبط؟ طيب لو افترضنا ان هو قرر يخلي فلوسه في السكيورتيز اللي هي البوند اند ستوك، طب ايه هو بقى الميكس اللي هيعمله من الاثنين؟ طب يبقى الديسيجن الثاني بالنسبه لي هو السكيورتي سيلكشن. اتفقنا ان الستوكس البروفيت بتاعها عالي، ملهاش ماتيوريتي ديت، الريسك بتاعها عالي. والبوند العكس، كل ما تقل المده الزمنيه بتاعت الحاجه بتاعتي الماتيوريتي ديت بتاعي كل ما بيكون الريسك اقل. طيب انا كشخص بقى عندي دلوقتي ستوكس هتديني 12% بروفيتس بس الريسك بتاعها عالي، وعندي بوند هتديني 4% بروفيت بس الريسك بتاعها قليل. هختار مين فيهم؟ هختار الحاجه اللي هاي بروفيت هاي ريسك، ولا هختار الحاجه اللي لو بروفيت لو ريسك؟ عشان ياخدوا الديسيجن ده في عندنا two different strategies. يا اما ان انا بقول حاجه اسمها توب داون، يا اما بوتوم اب. التوب داون ده انا ببص على الريسك، ما يهمنيش البروفيتس. انا بقارن الريسك وعلى اساسه باخد القرار بتاعي. انما البوتوم اب انا ماليش دعوه بالريسك، انا بركز على الريتيرن، انا المكسب اللي هيجي لي ايه. طيب الفعلي بقى ان انا عندي الماركت بتاعي اللي هو الفاينانشال ماركت ده كومبيتيتيف ماركت. يعني ايه كومبيتيتيف؟ يعني انا عندي فيه لارج نمبر من السيلرز والبايرز. طيب الناس دي كلها بتبقى بتدور على انها تعمل ايه؟ تعمل حاجه اسمها ريسك ريتيرن تريد اوف. يعني بدل ما هو ياخد حاجه هاي ريسك هاي ريتيرن، او يضحي بالريتيرن وياخد حاجه لو ريسك لو ريتيرن، لا هو هيعمل حاجه اسمها دايفرسيفيكيشن، تنويع. هياخد شويه هاي ريسك هاي ريتيرن وشويه لو ريسك لو ريتيرن، فيبقى لو حاجه خسرت الحاجه الثانيه بتبقى بتكفر الخساره اللي حصلت دي. This is the end of our lecture today. Thank you and see you next week.